Namaste, welcome to Arthaniti, where we discuss money and money matters to help you in your investing decisions. In a year marked with global uncertainty and bold policy actions, the Reserve Bank of India's back to back repo rate cuts have set the stage for a new chapter in Indian banking. As interest rates dropped to 6% for the first time in the last 5 years, banks raced to lower the lending rates, offering relief to borrowers and igniting fresh competition amongst lenders. Against this backdrop, the quarter 4 results of the top private sector banks in India was under the spotlight. Now, HDFC Bank delivered a steady growth with a 6.7% jump in net profit and stable asset quality. It reaffirmed its leadership position in scale and consistency. Yes Bank was a surprise, a 63% surge in its net profit for the quarter, driven by lower cost and improved recoveries. But with Yes Bank, the question still remains about its long term growth and efficiency. But it was ICICI Bank that truly stood out in this quarter. Its profit soared 18% year on year basis, outpacing its larger rival. And best in the class net interest margin of 4.41%, ICICI Bank combined rapid credit growth, superior returns, and tight cost control to emerge as the clear winner amongst the private sector peers. As investors seek clarity in the changing rate environment, ICICI Bank's robust fundamentals and decisive execution have set it apart as the bank to watch out for in 2025. So, ICICI Bank is what is going to be the focus in today's video. ICICI Bank has just released its quarter 4 financial results, and the numbers are impressive by any standard. The bank has reported a stellar 18% year on year growth in its net profit after tax to reach 12,630 crore rupees for the quarter ended March 31st, 2025. Now, this strong bottom line performance was supported by a 13.7% growth in core operating profits, which rose to 17,425 crore rupees. Looking under the hood, the bank's profit before tax, excluding treasury, increased by 13.2% year on year basis to reach 16,534 crores. What makes the numbers particularly noteworthy is that they come against the backdrop of a challenging macroeconomic environment, demonstrating ICICI Bank's operational resilience. The loan book tells an equally compelling story. Net domestic advances grew by 13.9% year on year basis and 2.2% sequentially as of March 31st. The retail loan portfolio, which is a key driver for a stable income to the bank, grew by 18.9% year on year basis. Now, the balanced growth across segments speaks of the bank's well executed diversification strategy. Regarding the annual performance for the fiscal year 2025, it maintains an upward trajectory. Profit after tax surged to 47,227 crores, making a robust 15.5% jump year on year basis. Core operating profit for the year increased 12.5% to 65,396 crore rupees, and profit before tax excluding treasury rose 11.4% to 60,713 crore rupees. The annual figures confirm that the quarter 4 performance of ICICI Bank was not an isolated event but was part of a consistent growth pattern that has characterized ICICI Bank's recent journey. Let us follow the smart money and check the FII DII activity. Now, one of the most telling indicators of a stock's position comes from analyzing institutional investor patterns. FIIs and DII movements often signals the confidence level in a particular stock. Now, if you check the last 3-4 trading sessions in April, FIIs, foreign institutional investors, have been net buyers, whereas domestic institutional investors have been net sellers. Now, this pattern suggests that institutional investors are rotating from domestic to foreign funds, with FIIs showing renewed interest in the Indian stocks, particularly in market leaders like ICICI Bank. The first quarter of 2025 showed fascinating divergence in institutional behaviors. In January, FIIs were net sellers, withdrawing nearly 87,000 crore rupees from the Indian equity market. DIIs nearly neutralized this impact by injecting 86,000 crore rupees in the market. By March, it marked a significant turning point. FIIs making their highest equity purchase for 2025 at 7,470 crore rupees. Now, this counterbalancing effect between FIIs and DIIs have been crucial in maintaining stability in the banking stocks despite volatility in the broader markets. Currently, DIIs hold nearly 16.9% of Indian equities compared to 17.23% of FII holdings. Now, this is the narrowest gap since 2015. In banking sector specifically, DIIs have increased allocation to financial services by 80 basis points quarter to quarter basis to 25.86% while reducing exposure in the energy sector. This rebalancing has contributed to ICICI and HDFC Bank collectively receiving 1.54 lakh crores from mutual funds in the quarter 3 of financial year 2025. In Q4, ICICI Bank maintained FII ownership at 45.71%, whereas DII at 44.64%. Now, this reflected sustained institutional trust in the bank. Comparing the results of ICICI Bank with its larger rival HDFC Bank to check the competitive edge which of the two banks have. Now, the figures of HDFC Bank for financial year 2025 are impressive enough. Its revenue stood at 3,36,000 crore rupees compared to ICICI's 1,91,700 crores. Profit for HDFC stood at 73,440 crore rupees, whereas for ICICI Bank it stood at 47,227 crore rupees. Profit growth year on year basis was impressive for ICICI Bank. In case of HDFC, the growth was at a rate of 6.7%, whereas for ICICI, the growth was at a rate of 18%. Now, earnings per share for HDFC Bank stands at 92.51 per share, whereas for ICICI Bank, it stands at 67.51 per share. The net interest margin for HDFC Bank is 10.3%, whereas for ICICI Bank, it is at 9.5%. Now, comparing the figures, it is clear that HDFC Bank maintains a lead in absolute terms, but ICICI Bank's growth rates have been more impressive, positioning itself as a better value proposition. Let us enlist some of the strengths of ICICI Bank. Under the strong leadership of its CEO, Sandeep Bakshi, the bank has achieved remarkable stability and improved operational performance. It has successfully accomplished its target of 15% return on equity, marking a significant milestone in the bank's strategic roadmap. Secondly, the asset quality of the bank has improved significantly. Gross NPAs have been falling consistently and provision coverage ratio improving to 80%. Now, this aggressive cleanup of the balance sheet has positioned ICICI Bank to capitalize on growth opportunities without the legacy burden. Thirdly, ICICI Bank's healthy mix of high yielding portfolio assets, both in retail and business banking segment, balanced with low cost liability franchise, showing strong growth in CASA ratio. CASA is current and savings account ratio. This advantageous product mix helps bank maintain a healthy net profit margin. ICICI Bank having a higher proportion of floating rate loan book, it stands to benefit from the interest rate cycle as portfolio yields improve with interest rate increases. Now, this helps to provide a natural hedge against interest rate fluctuations and positions the bank favorably in current monetary environment. At current market prices, ICICI Bank trades at a discount compared to its peers like HDFC and Kotak Mahindra Bank. Now, this valuation gap presents a potential opportunity for investors, especially considering the bank's improving operational matrix and growth trajectory. From a technical perspective, ICICI Bank stock is showing promising signals. It is currently trading at a key resistance level of 1406 rupees. It shows a strong support established around 1350, major swing low to 1300, psychological resistance to 1500. Now the 2024 high stood at 1600 rupees per share. Now, to summarize all the points that we have spoken in this video, the strengths of ICICI Bank lies in its consistent profit growth trajectory, its improving asset quality, strong management, attractive valuation relative to its peers, and positive technical setup. On the flip side, the challenges that the banks face are macroeconomic uncertainties, potential interest rate volatility, and competitive pressures in retail banking. For long term investors, ICICI Bank offers attractive risk reward propositions at current levels. Its robust fundamentals, coupled with its discount valuation compared to peers, provide a margin of safety while offering substantial upside potential. The impressive 18% profit growth, improving asset quality, and strategic positioning make it a standout candidate for investors looking for quality exposure to India's financial sector. Do you agree with this analysis? Please do your own research and let me know what your analysis suggests. Do you think ICICI Bank is a good investment at current levels? Please approach a financial advisor to make the right investing decisions. This video was for educational purposes. If you have liked the information that we provided in this video, please like, share, and subscribe to our channel for more such interesting content. Until next time, stay safe and happy investing.